Hello YouTube. Today we're going to be talking about how we either have a boom or a bust. What I'm talking about is that we now have a lower weekly low on the S&P, which is something that I was looking at specifically for us to be taking another leg down or up for us to bust and go down and test this 200 weekly moving average. The boom would be that actually this is just another trap as we go into opex, and that is a false signal where this lower low actually got bought up really fast. So something I want to remind people of is that there are two things we want to keep in mind here as we look at the most recent price action for these last few days here. So bear markets are defined by strong opens and weak closes, and bull markets are defined by weak opens and strong closes. So if we keep that in mind and we have a look here at the most recent price action, what do we have? Well, even though some of these bars are actually red, we can look at that right now by flipping here to hollow. What we notice that, most of the red days are actually hollow, like we have here, 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 and here. So the reason why that matters is because those red hollow bars are going to be literally telling us that we closed stronger than we opened. We're characterizing that we had a weak open and we had a weak open and a strong close. That is literally the definition of a bull market. So what I really want to focus on today is to try to get a little bit more context in regards to what has been happening, because S&P is trading like a penny stock in this range. And yes, we can do technical analysis on penny stocks, and we want to try to understand what this all means. So again, if we keep that in mind, if we now flip back to full candles, what we're going to notice that the really important economic data came in the last 2 days here. So these specific candles, what are they characterized by here? Oh, that's right. They actually do have a weak open and a strong close. A weak open and a strong close with elevated volume. So what does that tell me? It tells me that the bulls are not down and out. So it looks like this might just be another trap. And I know this might be really confusing for people because, to be honest, there is a deluge or a flood of negativity out there, right? We have the Prime Minister of Italy looking to resign, right? It's not been accepted. The president declined it. So we get Italy. What else do we get? Well, overnight, we also heard from Russia. What else do we hear? Well, we heard that PPI is actually higher. But again, I don't want to focus on the data points too much right now. We want to focus on the charts. I believe that PPI is actually forecasting that next month's CPI is actually going to be lower. I encourage you to have a look at the core PPI versus the PPI numbers. If you're not sure what that means, just look at the candles here. The reaction is that we had a soft open and a strong close. That's all you really need to know. What else do we have? Well, we got China saying that people don't want to pay back their mortgages. What else do we have? Well, we were talking about a 100 basis point hike, which got walked back earlier today by Waller when he was speaking. But then Buller came out, said the same thing. And what else do we have that's negative? Man, I don't even know. Oil prices, right? Russia said that they might turn off oil for Europe and they might not have any energy for the entire winter. So, like, literally, what else are these bears going to get? I don't want to be the perma bull who has his blinders on, but it's getting pretty hard for me to see that we're getting negative news and a negative price action. So I want to focus on a few more things today as well, since it is going to be the close of the week. I am noticing some pretty broad-based risk on sentiment. And what I want to look at specifically is going to be how the S&P is set to close. And then I want to look at a few more things. So first thing I want to look at specifically is going to be Bitcoin. And we can note today that Bitcoin is currently up by about 1.6%. It rocketed higher yesterday. And Ethereum is actually up by 7% today. It's also notable that technology is actually closing green, or the QQQ is closing green. We note that here by it being up by about $1 or 0.36%. S&P is down by roughly $1 or 0.24%. And we know that the dollar has been all around today, right? Above 109, came all the way back down on Waller, settling here 108.68. So the DXY is up by about 0.6, which means if it was flat, S&P would have actually closed up by about 1 point. And QQQ would have actually been up by about 1% today. So what is the theme? And why are you talking about these things? Because it's been a while since we've looked at other charts. I want to point something out here very specifically because I am looking at Bitcoin as a broad-based risk on sentiment gauge. And we can note here that we have a high going all the way back to 2018, depending on the chart you're using. We're going to get different numbers here. So Let me actually use the magnet, and let's snap this here to the all-time high from 2018. This is also going to be on Coinbase, so you might get a different number. But anyways, here I'm looking at 19,891.99. That is our 2020 top. What's very interesting to me is that we've actually been forming a base here. We're forming a base above 20,000, but below our 200 weekly moving average. So what this tells me is that Bitcoin being able to actually go risk on and being above 20,000, if we're able to rally by roughly another 10%, I could see us going dramatically higher. And the second reason why I find this very bullish is because this is the riskiest asset class. And if it's able to rally, but there's no volume confirmation yet, what does that mean? We are attempting a reversal. It's not yet confirmed. And if we keep in mind that Bitcoin is the riskiest asset, what's going to be similar to it? Well, it's going to be technology stocks. So that would likely explain the reason why we have technology green today. And if I look down at the ETFs, ARK is red, but it's been bouncing around quite a bit. XLK is actually up by almost 1% today as well. And the difference between QQQ and XLK is just that XLK does not have as much of a heavy weighting for select tech names like Tesla and like Amazon. So what's really interesting to me is just that I'm noticing that the bearish news is just having a really hard time getting us down. And the bullish news is having an oversized move up. So what I want to point out here is just, again, we talked about what a bear market and bull market are defined by. Weak opens and strong closes. Well, that's exactly what we have for the last 2 days. Let the bulls think they got the edge, but really they don't. We see that here by gap down, pump up, gap down, pump up. Then we flush once, gap down, pump up, gap down, pump up. This is, for me, it is textbook bullishness. However, I think that it might be harder for the average person to actually see this on the tape because they just have the recency bias where all they think is down. And yes, we do have a downtrend. It's hard to ignore it. We are below the averages. What I'm just trying to point out here is that the way I would be expecting the market to act is not the way it currently is. If we truly are going to take another leg down, why are we not going down on bearish news? Again, as I pointed out, there was like 5 different individual data points that were bearish overnight. Who we lost recently out of the G7? Again, 7 countries. Let's think about this too. Who do we lose? Well, again, unfortunately, there was Shinzo Abe in Japan. That's 1. Mario Draghi in Italy. That's 2. And then Boris Johnson in the UK. That's 3. We had Sri Lanka and other countries that are currently having issues as well. So 3 out of 7 in about a week is really bad. It seems like we are currently at peak fear, and I think that we could potentially be at peak hawkishness from the Fed as well. We can note here that we've not really been moving out of the roughly low to high 20-point range on extreme fear. Sorry, for the fear and greed index, which means that the market's having a really hard time finding true direction, but sentiment is pretty clearly negative. And that is generally when we're going to form a bottom. Bottoms happen over time. It takes time to carve one out or for it to truly base. What I will also note is that we have low volume. And with tomorrow, it's going to be important where we actually close out the week. As a reminder, we do have a Friday stream on every Friday, which we will walk you through for the final hour. Come in and hang out with us if you want to know what we think. But anyways, again, as I look across the broader market, one more thing we have to also keep in mind is that we do have monthly opex. So if we look here at the last 1 month performance, again, what does it look like here? Whoa, there's actually quite a bit of green, right? Apple up 11%, Microsoft up 4%, Google up 4%, all healthcare up, Tesla up 9%, Amazon up 6%, healthcare services also up. Utilities also up. So there's actually very clear rotation happening here. And what would normally happen if we have been quite bearish for the month is that they'd be looking to buy up the technology stocks, notably Apple, Tesla, Amazon, because of options. So instead of looking at those individual ones, what I want to look at instead is what is happening with the S&P options because, whoa, it's getting busy here. We note that tomorrow is going to be the monthly expiry. We're looking at July 15th. We're looking at the 16s. And what I would just note here is that, look, there's 300,000 of these down at 370. There could not be more motivation from these bears to actually get us down. They're just unable to actually cinch it. So starting at 380 with 100,000 in open interest, we've got fat stacks starting everywhere from 380 down to 370. In terms of calls, we have a lot of volume starting at about 374, a lot going up here to 380. And I honestly don't know where we're going to close tomorrow. I think we're going to close on a round number though. And roughly 3775, which is pretty much where we closed, is splitting the difference between 375 and 380. And that makes perfect sense for me because we note that right here, all of these, the calls that are above, these ones here from 377 to 380 are now burnt, and everything below, every single put got burnt today. So if we're truly going to get that bearish move, it should be happening into tomorrow. If we're going to get a market maker maximum pain, I think it might be somewhere between 375 and 380. Honestly, I don't know. What I will be looking for is going to be what converts into open interest. So all that means is here we're looking at two columns. First one here is going to be volume, and the one on the right is going to be open interest. So this just means that what was traded today, volume, if these convert into open interest, it means that they're holding them overnight. So if all they're doing is trading, these numbers are likely not going to change very much, right? Roughly 100,000 at 380, roughly 150 at 370. And same thing on the call side. I'm watching this 380 here at about 50,000. If these numbers increase, it means that they were actually motivated enough to hold overnight. If they don't hold overnight, they're likely just trading, and that would explain a large part of the chop that we saw today. Because, oh boy, was it choppy. It was choppy in the morning, and then we clearly got a move higher. Last thing I want to look at here is going to be the August monthly expiry because, again, as a reminder, tomorrow is going to be the last day for people to get positioned for the next month. So looking here at August 19th, we're looking at the 16s. What do we have? Well, we have those exact same strikes continuation on the bear side. So they're not just motivated for Friday, they're motivated for the foreseeable future. And again, we can note here that 375 to 370 has a put spread being built. We also note that we got 380 big puts. We got big puts at 385 as well, only about 26,000 on the call side. There's only one area that actually has it. It's 380. And as I've been noting, this has actually been a straddle they've been building, which means they're buying equal amount of calls and puts. So it looks like the only people who are motivated to buy beyond this week are still the bears. So if the bears are in control and they're very motivated, why can't they take the chart down? Why can't they break it? Again, if you remember from yesterday, I was talking about how I think that there is everyone looking at one side of the trade. So if everyone's looking at one side, well, what could happen? If we get a bullish move, I still believe that the risk reward, meaning if we're truly going to get a move up, we might moon, right? Risk reward, in my opinion, is going to be up. However, the probability, meaning what is most likely going to happen, is still down. So what's really important is for you just to determine what side do I want to trade and then stick to it. So for me, even though everyone's bearish, the probability is for us to go down. I still believe that the risk reward is for us to go big bull. And our algorithm has been working overtime to deliver us ideas. And I can tell you that it's part of the reason why I am so bullish. So with that said, if you want to know the reason why I was bullish going into this week, there'll be a video that queues up here in a moment, which explains my weekend deep dive thoughts on the reasons why we are bullish and what we need to see specifically for us to continue to find momentum. Thank you for watching. I look forward to seeing you tomorrow.